All right. Good morning, traders. Can you hear the voice? Is it on the good mic? Not the bathroom sounding mic, which is really my excuse from just running the live room from the bathroom. And I just say that so you guys will be none the wiser. All right. Good. Welcome to the live room. I know we have some new members in here. Glad you guys are excited. I'm excited today. Not really sure why. Maybe it's because I just got coffeeed up. Or maybe it's because I'm getting stuff done. That's good. You guys know recently it's been an interesting time in my trading / coaching where we're working on a lot of things. We've got the new course coming out. I've got the event on YouTube to kind of give a first look at the new course, and then we've got a workshop that may be coming out soon as well, and it's all happening at the same time. So I've been working like a madman trying to get it done, and at least I got one of those things done yesterday. So it's a little bit off my table. And we've had some move. We have interesting time in the market, which is good. Whenever we have movement in the market, it gives us stuff to analyze. We saw that yesterday. I don't know why my RSI is gone from this chart. I will fix that. That is interesting. But that's always big as well. Give me 1 second, guys. Let me just kind of reload my deal here. I don't know why my RSI is gone. Pumped from the coffee. Well, yeah, coffee's good, man. The coffee signifies like the first cup of coffee signifies the start of my day. The last cup signifies like the ending struggle to get by. So I have a routine. I get the coffee is the last thing I do before the live room. And I get excited over doing the live room, so I know that I'm associated with when I drink my coffee, it's live room time, and that excites me. What doesn't excite me is my RSI being missing, but that's a minor issue. So let's see if that's up, and then we'll get rolling here. I don't know if I was doing it actually. Yeah, it's gone. Oh well. I'll add it back during a break. But all right, so let's get started today. We'll get started by taking a look at the economic calendar. Not much left on the radar for today, but tomorrow is a big day, right? Yesterday there was some new appointments over in who was it? A new prime minister elected yesterday for you guys over in UK, London. New prime minister yesterday. Tomorrow we have an interest rate decision. So a combination of that you have a combination of a new prime minister. You have interest rate decision for the Bank of England. You've got, what else? You've got Fed rate decision, I believe, next week. There's a lot of stuff going on as far as monetary policy. And that typically is the biggest thing that moves the market. So we've been seeing a lot of movement in the market. We saw yesterday the euro was tanking, offering some pretty good trend continuation opportunities. Part of that could be positioning before tomorrow's rate decision. Now, tomorrow's rate decision is going to be interesting, right? Because the market likes to move on deviation. I got asked the other day, how come the market moved between this? Matter of fact, Naomi was asking some good questions as well about news and how to tell if the market is going to move off of it. And rule of thumb is if everyone knows what the news is, the market typically doesn't move because everyone had already priced that in well in advance. The market typically tends to move, and when I say move, get these big movements, when there's some type of split decision, when a certain percentage of the market thinks one way, and a certain percentage of the market thinks the other way, because no matter what happens, one party is going to be wrong and they're going to be left panicking. There is supposed to be, the last that I've heard, there's maybe about a 30% chance at any type of rate change tomorrow. Now, 30% means there's a chance. I personally don't think there will be any decision. I think they will wait and see what we do here in the U.S. first and then make a decision. But you never know. If we were to get any type of surprise, either from the rate statement or from the press conference afterwards, it could be a very, very, very busy day in the market. So I think what we're seeing right now is some last minute positioning for that, either getting into positions or getting out of positions. But tomorrow's the big day that we want to look for in the market. So let's get started today. Speaking of the euro, let's get started with the euro dollar. And I am going to go ahead and put my RSI back on because it just feels naked, doesn't it? It feels weird. I don't know how this got off. I bet my kid came in and started mess with my charts. Let's do this. Let's put on an ATR. Let's put on an ATR. Let's do that. Boom. And let's give me a second here. And let's put on my RSI. Of course, I don't have it set to default because why would I ever do anything that makes sense? But you get to see my RSI settings, right? So RSI, I have it defaulted for the range bar charts. I'm going to use the 5-period RSI, 7-period RSI, excuse me. My smoothing is going to be 1 because I'm a smooth dude. And we're going to make some changes down here. They actually are set to default already. My oversold is set to 20 instead of the traditional 30. My overbought, so my upper band is set to 80 instead of the traditional 70. So my RSI is slightly different. One thing I do have to change here is I have to make this from black to white so it can actually be seen. And then here's what I'm going to do here. Right? Panel. Where's it at? Where's panel on this bad boy? Here you go. Panel. I want to take it from panel 3. And I want to put it on panel 2. That way, now my RSI and my ATR are on the same plane, same panel. Do you guys see that? They're both at the bottom here instead of having 2 separate charts. Graphs, whatever. Yes, no, maybe so. Okay. I do that because I don't need to see the squiggly wiggly that is the ATR. I just need the number. So I have no use at seeing the ATR in the same light as I see my RSI. So I just hide it at the bottom right here. That way I can see the number. I can tell the ATR is 16, but it doesn't take up any extra real estate on my chart here. So that's how I like to set up my charts. And in fact, what I could have done, I could have just loaded my template and that would have done it better. So euro dollar on the daily. Yesterday, we were looking for a break below and we were looking for a continuation down to our lower level of structure. Well, we have gotten that. We did see some continuation. We saw it during the live room. We saw a lot more after the live room. And price action has really fell to where we thought we would fall to, our previous levels of structure low. So when we identify what's on the chart, what would we identify? Price action has done what? Price action is trading where? What would be going through your mind? And for you guys that are new to the live room or new to trading, this is the very boring process that we go through each and every time that we look at a price chart to keep us consistent in our analysis. It's funny. It's so boring, and you know when I first started teaching, it was like, man, how can I make this more exciting? And I'm like, wait a minute, duh, trading is not supposed to be exciting, Akil. Good trading is boring. Good trading is boring. And this is what we mean by it, right? When you kind of get in the zone, when you first start off in your trading journey, sometimes you get a little excited over everything. You're like, oh, look at that. Oh, we're doing that. Oh, we broke this. Oh, we broke that. And eventually you get to the point where you know exactly what you need. You're so accustomed to doing the analysis, it's just robotic. You're like, okay, identify, predict, decide, structure. All right. Identify, predict, decide, okay, structure, fibs, 1-to-1 measure move, and ABCD, wow. And it gets boring. But that's a good thing. It means you're trading good. You're not trading based off of excitement and emotions. You're more machine-like. And then you can get your excitement from other places. You can go bungee jumping for all I care after the live room's done. Get your excitement somewhere else, not from the markets. So we are at structure, and as Chris mentioned, will it hold? And the answer is this. I know the answer, guys. I know the answer. And the answer is, I don't know how to spell that, but maybe, maybe not. Who knows? We never know if it will hold or not, but we can prepare. We can say if it holds, then I can look for this, or if it breaks, then I can look for that. And what we do is we set up our predictive analysis well in advance. So let's start with if it holds, right? If we hold this level, if we get, say, a higher high, higher close, right? Many of you guys are familiar with 3-bar reversals. Right now, we're at the second part of it, right? We have our high momentum bearish candle, high Momo, right? High Momo. Now, no, check a lower time frame. Nope, that's not going to help with that. The lower the time frame you go isn't going to help us with our prediction, right? Now, we would go down to a lower time frame to look for reasons for entry, a way to get involved, but we don't want to go down to a lower time frame because the lower the time frame you go, the falser the signal is going to be. And I don't mean to say that lower time frames offer bad signals, but when you look at the hierarchy of charts, higher time frames hold more power. So a break and close, a violation of structure on the daily is much more powerful than a violation of structure on the 4-hour. Does that make sense? And we can even see stuff like this. Like, so say this, just pretend, right? Say this was our level of structure, this blue line, since I gave you guys the wrong color yesterday, right? Obviously on a daily chart, let's say this was a major level structure. On a daily chart, you're looking at this, you're saying, ooh, look at that. Hold of structure. Very good sign for a potential bullish entry, counter trend trading move. However, as Jason Stapleton always used to say. However, right, on a 4-hour chart or an hourly chart, we could easily have a lower low, lower close below this, right? This wick came all the way down here, and this is a day, right? We can easily have a lower low, lower close before the market reacted and pushed up again, which AKA would be a false breakout. Now, I'm not saying you don't trade it, right? I'm not saying you don't go down to your lower time frame and trade it. I'm a big believer in that. But as far as gauging your opinion on the market, and that's what we want to do first and foremost, always start with the higher time frames to gauge your opinion, and then drill lower to look for your opportunities. Does that make sense? Bird's eye view, and then look for your opportunities instead of vice versa. Because if not, we can get into the really bad habit of falling into a negative confirmation bias. And that is like, I'm looking at this, I'm like, okay, I want to get short. So I'm just going to go down to whatever time frame I need to find the violation until I get it. And before you know it, you're messing around on a 1 minute chart, looking at lower low, lower closes, convincing yourself that structure has been violated, and you can get into a lot of trouble. So you want to have a set process that you follow, and the lower time frames, they fall into that process. Just remember, you're using them for a specific reason. So. Lower. I'm a big fan of using multi-time frame analysis, either a 3 or a 2 setup. So a higher time frame and a lower time frame, or even a higher time frame or a higher time frame and a trading time frame, or either a higher time frame, a trading time frame, and then a lower time frame if you really want to dig in and get maybe a even smaller view of what your need for entry. But definitely, I definitely think a higher time frame should be involved or include it, because I just think you need perspective on what the market is actually doing. It says if we break, then we can look for shorts. If it holds a reversal, we can look for counter trend and jump in. Yeah. So here's how we would need to set up this trade, right? So let's start with the potential long entry, right? We're halfway through or 3/4 way through or whatever it is. Let's say halfway through a potential 3-bar reversal, right? We have that bearish high Momo candle, high momentum bearish candle, and it looks like we're setting up a pin bar. Now again, this is a daily chart, so this may change a little bit throughout the rest of the day. We have a few hours left, right? But as of right now, we're looking for a looking at a potential pin bar, and we know that a higher high, higher close afterwards would give us that 3-bar reversal. So let's ask ourselves the question: if I were to get the opportunity to be long, like if we were to go down to a lower time frame and find an opportunity to get long, which may happen, where am I predicting price action to go? Tell me when to go. Any E40 fans out there? Where's Raymond? Raymond's from the Bay. Dum, 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 dum. No? E40's got his own dictionary, man. Hey, there go Raymond. Speak of the devil. George says, I don't mind him. He's different. He's different. So Ale says 112. 112 even handles. Draw some lines out. Any other ideas? This is the live room, right? So this is a safe space for sharing ideas. This isn't your typical trading forum where you're going to get yelled at and criticized. 112? Why would you say that? What are you, a rook? Well, yeah, I'm a rookie trader. That's why I'm asking questions. What type of trader asks questions? The one that wants to get better? You should already be better. Okay. Going back to my experiences on trading forums. Last says the inside level a bit to the left. That's how it was, Tony. Last says the inside level a bit to the left. Looking right here, perhaps. Right there. That voice. Well, look, that's how it was, right? I spent, man, I was and this is where I feel for some of you guys. Many of you guys, right? The first thing I say when you get on the platform is introduce yourself to the chat. And every once in a while, we get people that come on and like, yeah, Keel, I've been here for like 3 months. And I never actually, I've been watching the chat, stalking, but I never actually said anything. I finally got the courage to hop in and say hi. And it's amazing, right? And that's what I did on the forums, right? I was on the trading forum because, I quit my 3 jobs to trade because I was an idiot. I had nothing better to do but learn how to trade. And the internet's an amazing thing. So you find places to go. So I would be on trading forums trying to get ideas from, Pip Daddy and Big Pippin and all them, all those people. Scotty Pippen was on there. That was a good one. And I would look at the forum and I'd be like, okay, these guys have all these followers. What are they doing? How can I, you learn, you find someone that is doing it and you try to copy them. And, you think these guys are doing it because they have all the followers and they talk very confidently. So I'm there. Yeah, keep your pip hand strong. Yeah, he was on there. Yeah, I was scared of him. Didn't want to get slapped up. So I was on there and I'm watching. And then finally one day, like I have this idea and I'm like, I'm going to share it, Akil. I'm going to share this idea. And I build myself up. I get all pumped up and I put it in there and I write it and I look at it and I make sure there aren't as many grammatical errors as I usually make. And I hit the send button. I'm like, boom. Hey guys, thinking about shorting the euro dollar. What do you think? And I'm waiting, heart pumping. Like when you're a little kid and you got that girl that you like and you send her the message that says, do you like me? With the little checkbox, yes or no. And you slide it to her. You work yourself up to slide it to her. And then like, and it comes back to you and you're all freaking out like, oh. And you open it up. In my case, it usually says no. But sometimes it says yes, I suppose, for other people. So that was the feeling I got. And so I entered it and it's there. It's out there. I did it. I committed. And I'm like, okay, this is why we should get long the euro dollar. This is why I'm thinking about getting long the euro dollar. And then, one of those guys comes in. Really? Long? Here's why you should probably get short. And confidence just destroyed, right? Confidence just destroyed. Boom. Ripped my heart out, right? Girl sent me the letter back. I look back. She's smiling. I'm like, oh, we in the bag. And then it says no. And I'm like, oh, heart ripped out and thrown and pecked by city birds. Pigeons, if you guys aren't familiar. So what do, right? So I go to my computer and I immediately cancel my long order for the euro dollar, right? I immediately cancel my order because, Pipmaster 500 said, do you really want to do that? And I'm like, well, maybe I don't really want to do it. And then, of course, you guys know what happens, right? What happens? What happens as soon as I cancel my long order? Come on, you know it. Yeah, it goes long. It goes long, man. It shoots right up. And I'm sitting there with the stank face, just like, all right. Okay. Then of course Pip Daddy comes. I didn't mention anything back, but of course he comes back with some excuse for why he didn't get into the trade, or like, yeah, I was thinking, we should look to get short, but we never actually got short because blah 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 blah. Right, but yeah, those are, man, highly influenced, right? Highly influenced. So this is a safe place. You won't get yelled at or made fun of, or laughed at or anything like that. So we got a few orders right here. We're looking at 112 is one idea. Latch has the inside level a little bit lefter right here, about 111.93s. Anybody looking at this level a little bit lefter here, inside structure? Got a good lesson on inside versus outside structure. 111.80s, anybody? George says 111.80s. Okay, so doesn't matter what level you choose, right? I can care less. Doesn't matter what level you choose. You're doing this because of what? Raymond says that's the level I was looking at as well. What's the purpose of this practice? What's the purpose of this profit projection practice? Oh, you like that. You like that? I was about to say that's precipitation, but that's alliteration. That Philadelphia high school almost got it mixed up, but alliteration, right? What's the purpose of this profit projection practice? Yeah, me smart. It's the see if there's enough room. Confidence as well. Yes. Help with your confidence when you predict price correct. Yep. A perfect price prediction with precise profit projection is always a good thing for your confidence. Spitting all over the mic with all these P words, right? But the question you want to ask yourself is there room? Is there room for me to take the trade? Right? Is there enough room? Because there has to be room to take the trade. I think that's something that is overlooked in trading. Many people look for these cool opportunities, but there may be not room to go. Like if you want to get short right here, right? Is there really enough room to get short and really capture profits? Probably not, so it's not worth it. So you want to make sure there's enough room to get long. So if I plan on getting long, and we don't know the level, let's just assume at market right here or something like that, is 31 pips enough room? Is 40 pips enough room? Is 50 pips enough room? Because if it is, then we can follow through with the rest of our trade. If it's not, it's just not worth your time, right? Don't waste your time on something. Why go through, aside from like the education and training purposes, why go through all this analysis if there's only 10 pips of potential profit, right? You go through all this analysis, wasting this time to be like, oh, there's not enough room for movement. You could have spent that time doing something else. So you always want to make sure there's enough room, right? That's why it's entry, stops, and targets. They all work the same. So we can revisit this, but make sure there's enough room to go to the upside. So that's decision A, if price action holds structure. Decision B, if price action ends up violating this structure down at 110, this is called $1.11, a little bit below this level, even though it's technically 111.07, but let's just say 111. Then what? Is there room for price to go lower? Where do you predict price will go lower to? If then. Look left, right? Probably bounce out to a weekly, just right here on the daily, right? Little minor level, a little bit below there at about 110.80s. But our next level, our next zone of structure is going to be right in here, right about 110 even. So about 100 pips to the downside. So there is room to the downside as well. Now, for these purposes right now, what I would do is this. I think it's okay to have it in your mind. Right now, I wouldn't even worry about the short opportunity until we violate structure. And that's just me kind of simplifying the way I think. I don't want to waste energy on two things, right? Currently, we are holding at structure, so let's focus on the potential buying opportunity. If price action violates that structure, then we just shift and go to the potential selling opportunity. And that's the mistake that many traders make. Many traders get caught in the same idea, right? I can't tell you how many traders I've spoken to where it's like, I'll do a chart like this. I'll do the exact same walkthrough I gave to you guys, right? Exact same walkthrough. And I'll be like, hey guys, looking for potential longs up here. And then market violates structure. And I'll be like, hey guys, looking for potential shorts right here. And it's like, Keel, you just said yesterday you're looking for longs. Well, yeah, yesterday I was. Well, why'd you, you can't just switch like that. What? Are you serious? First of all, I'm a grown man. I can do whatever I want as long as my wife allows me to. But second of all, that's trading, right? I'm not stuck in my prediction for egotistic reasons. I'm following what the chart tells me, right? I'm predictive in my analysis. I'm reactive in my execution, right? Today, price action was holding structure, so I was looking for longs. Well, guess what? Overnight, price action broke structure. I'm no longer looking for longs, right? That idea has been violated. It's time to shift. It's time to shift, right? Does that make sense? That is trading. We do our jobs of analyzing the chart, and then we base our opinion off of what we see. And guess what? Since the chart changes, so must what? So must our opinions on the market. But that's the difference between traders that are consistently profitable in the market and traders that you see. I know, raise your hand. We're typing a yes, I guess, since we're not live. How many of you guys have ever heard a story of a trader that's been stuck in this position and it's just going against them for like forever? Like, yeah, man, I was long the pound dollar and it went short and I'm just hanging on, right? You think it's going to reverse, right? Any day now. Like, well, let's, how do you get in that position? How do you get in that position? There's only a single way you should ever be in a position like that. Right? Because guess what? Even if you took a long opportunity and the market went against you, guess what should eventually be executed? Your stop loss, right? The point of a stop loss is to find an area where you're like, you know what? If the market goes here, I'm probably wrong. If I'm probably wrong, I should probably cut my losses. And you accept it. You're like, yeah, you know what? Whatever. Trade loss. Right? But when you let a trade keep going against you and you don't have a stop loss or you move your stop loss, right? It's done for only one or two reasons. One is just you can't accept pain. And you perceive that by moving my stop loss and never actually getting stopped out, I will avoid pain. Where you actually just, the pain just gets bigger and bigger and bigger and you take a bigger chunk of pain later on. Or it's ego. Their ego can't allow them to be wrong. So they stay in a trade until they are right. Stupid. And I've been there as well. So, when I say stupid, I fall into that stupid category as well. I've been there. It'll turn around eventually. Yeah. Until margin call hits. You get margin call, then it turns around right away. So let's go down to the lower time frames. And let's focus on the buying opportunity because that's what's at hand right now. Now, again, keep in mind, euro dollar going to be very, over the next 24 hours is going to be, I would expect a lot of volatility. So this is a good practice for technical analysis. We might not be able to apply it. I have a feeling we're either going to go down or we're going to consolidate and go sideways until tomorrow's interest rate decision. But let's look at this on a 240, right? So dropping down to your lower time frame. Now, it's important that we identify the lows of structure, right? Because we are a good chunk away from the lows, right? We're trading at about 111.40s. The lows of our structure level are down here at 111.06, right? So we talked about knowing where you're wrong. You're technically not wrong until this level of structure is taken out. So you have to keep that in mind when you're thinking risk reward. Either that or accept using a smaller stop loss and accept that, hey, my stop loss is not in the best place. So I could be stopped out and I could actually be right. That's another option where if you want to have a smaller risk, you can do that. You just can't complain if it gets stopped out and then goes on in your direction. So not too much happening here on the 4 hour. You can see the doji candle was the previous candle. Currently, we're very early in this next candle, or not very early. We're 1 hour away from the close of this candle. We may see another doji. We may see a lower low, lower close, higher high, higher close. We just don't know yet. But currently, there's nothing that I see in the market that would be used as an entry signal. I would prefer that price pushed lower. I would prefer that price. I always like to see a test of the low, and I like to see how price action reacts down there. So I don't have much interest at this current level. We go down to the 60-minute. You can see the same thing. We're just starting to put in train tracks, back and forth, back and forth, back and forth. So unfortunately, the opportunity to, this was the area we were looking at yesterday, the opportunity to buy, I guess it all depends on your reason for entry, but it doesn't really look too appetizing here. And I've got all types of gaps in my, I don't know why I got gaps in my data this morning. See if we can close those up. Yeah, I don't know why that's there. Don't know why it's there, but we'll figure it out later. If it's consistent, we'll go over to trading view. But yeah, nothing to be here on a lower time frame either. So last set, maybe head and shoulders on the 15. Could be, yeah. Could be. Yeah. Could be. Not the greatest looking one again, because we're not really, I guess we're coming off of a downward move, a little bit more consolidation and then a spike high here. So yeah, you can look at it as one. Any questions on euro dollar? We're gonna head to pound dollar next. Probably should have went to that one first. We had a deep Gartley on pound dollar. But any questions on euro dollar? What could happen after the head and shoulders? Well, if the head and shoulders would need to do this to complete. So the head and shoulders would be an entry reason for long. So this is going to be your left shoulder right here, right? This is going to be your head. This would be your right shoulder. So there's a few ways to enter it. Okay. Are you a premium or trial member, Andre? Just so I kind of know how to go with this training here. Trial, okay. When you become a premium member, there's actually a full course on the head and shoulders, teaching the different ways on how to trade it. But essentially, it's a classic reversal pattern. So it's the market running out of steam and giving a potential reversal. To simplify it as much as possible, just not so that I don't confuse you, perhaps. What you're looking for is a break of the neckline. So this is going to be your neckline right here. A break of the neckline would signify the completion of a head and shoulders pattern, and you would look for the market to continue in that direction. So the market to continue higher. So if you're someone that's looking for a bullish opportunity to trade, you would want to see a violation of this level of structure, a violation of this neckline, about 111.55s, and then you would plan your trade after that, whether it's entering on a break or whether it's whether it's waiting for a retest and then a continuation higher. Another aggressive way would be to enter at the shoulder. You can enter at the right shoulder as well. That's really aggressive in my opinion. So it's got to be the right scenario. Does that make sense? But yeah, head and shoulders, classic reversal pattern in the markets. It's been around since the beginning. It's a really good one, and it's really frequent as well. Let me know if that makes sense. Perfect. Yep. But yeah, you would look for a move up. It would signify a potential end of the current trade and a move up. No, inverted is actually going to be a different pattern. This one would be called a head and shoulders bottom because it's at the bottom of the chart. If it were at the top of your chart, it would be called a head and shoulders top. An inverted head and shoulder, at least the way I define it and the way that I learned it, is a different pattern. It's essentially a head and shoulders bottom at the top or a head and shoulders top at the bottom. So the terminology that I'll use is if it's at the bottom like this would be a head and shoulders bottom. And then if it's at the top, it will be a head and shoulders top. You would just flip it upside down so it looks like this. And for you guys that are really new, this is like a shoulder, like look at yourself in the mirror, shoulder, head. For some of you guys that played too much football like me, maybe your shoulder's a little bit slanted. But looks like a silhouette. But honestly, all that matters is, you can call it inverse, inverted, as long as you know what it means. That's the main thing. I hate getting into arguments or discussions over terminology because, unfortunately, in trading, there's no set terminology. Have you guys noticed that? There's no set terminology in trading. You can get 100 traders in the same room and you can show them the same thing, and you may hear 4 or 5 different terms. Right? You got a double bottom, and then someone's like, "Oh, that's a funky touch." Oh yeah, Gabby's a good Gabby's a good example, man. She was the worst. See, the thing that was the worst with Gabby is that she thought everyone else knew what she was talking about. So I'd get emails and, paragraphs of emails, and it'd be like, "Akil, so I'm looking at the fluffy bunny unicorn right here with a double hummingbird." I'm like, "Gabby, what the hell is that?" She's like, "Oh, that's a Gartley inside a cipher. Why don't you just say that?" "Oh, I'm so used to calling it that." I'm like, "Oh, okay, whatever." But she knows exactly what it means. But she just made up her own terms to understand it better. She's like, "Oh yeah, that's called a bumpy ride." "What is a bumpy ride?" "Oh, that's a consolidation pattern, like a wedge pattern." "Well, why is it called a bumpy ride?" "Well, you see how it goes ebbs up and flow, ebbs up and down. That's like a bumpy ride on the road." Okay. Yeah. So like that. Yeah. She knew what it meant though. So that's all that matters. That's all that matters. As long as you know the definitions, as long as you can consistently apply those definitions. Yeah. But that's the one thing I hate as a teacher is like, if I weren't teaching, just like the whole thing where I would prefer to get rid of the terms trend continuation and counter trend, and that was my main goal of the new course. I just, as a teacher, you just can't, because it's like, how else do you relay a message if you can't explain what it is? But I'd really like to eliminate all terms and just have a knowing. But you can't teach that way. Yeah, do what sticks in your head. Yeah, whatever works, man. Whatever works. Imagine if we would all do that to you. It would drive me nuts. Yeah. It will not. Look, I would just look. My email responses would be very simple. It would be like, "What the hell do you mean?" Please define yourself. I would have that on a quick copy and paste. Please define yourself. Please define yourself. Please define yourself. Yeah. It's tough. I got a flood of emails. It was weird. I got she's a good sports armor. I got a flood of emails from Naomi yesterday. It was like 8 emails. It wasn't 8, but it was like 4 or 5 emails that came in a row. And like one of them was like, and then I got messaged like, "Ignore the third one, but the second to last one is the one you want to pay attention to, but not the first part." And I'm like, and I went through all the emails this morning because I wanted to have time to actually think about it. And I emailed her back, and I was like, "Naomi, can you remind me what the question was?" Because we were going from 2 places. We were talking on the chat about something, and then she's like, "I'm going to send you an email because I can't email me." She wanted to email me her spreadsheet. So she's like, "I can't email you. I can't send the spreadsheet here in the chat. So I'm going to email you." But when me and her talk on the chat, it's weird. It's like we'll start a conversation at like 8:00 in the morning, and then like I'll answer, and then like she'll disappear, but then I'll come back, and then like at 12:00 at noon, I'll see her answer, but then like I won't be there until like 3:00. So it's like a full day of stuff like this, and then the flood of emails come in, and I'm like, "What was the question again?" And part of that is because you can imagine how many emails I get a day, so I'm answering questions for different traders. So it's like my memory is very, very short. But I just found that funny this morning because I saw it last night. I'm like, I'm going to take my time, and I really want to concentrate because I like actually thinking about emails instead of quickly responding. And I'm going through them, and I'm like, okay. She said, ignore the first one, but then look at the second one. But the middle one was the one that I shouldn't look at, but I should only look at the spreadsheet of the 4th one. So I get through all 5, and I'm like, what is the answer? Because remember, I'm a very simple person. Like I need to be told like straight up directions. I'm not the smartest individual when it comes to that. Like if you have a question, like you have to be direct. Like you can't beat around the bush and give me these answers. Yeah. Funny, I do the same thing to my wife, where it's like I'll ask her a question, and it'll be a rant for like 10 minutes, which is great. But then like I can't actually find the answer within that rant. So I'm like, "So are we going out to eat or not?" "Oh, yes." "Okay, thank you. Just give me that straight answer." So, also I'm starting to feel like I'm the only one not emailing you, Coach. No, I mean, we got hundreds and hundreds of people on the platform. So and former clients, and it's No, it's not as bad. It's not as bad as I make it seem. I've not emailed him yet, but when I start to get deep into the courses, I'll be baffling his brain. Yeah. No, I talk to people in the chat. I get a lot of private messages on the chat, a lot of emails. It's nothing like crazy. It's overwhelming a little bit whenever we do like a launch, because that's when you get maybe like 50 or 100 people signing up at once, and that's a little crazy because when you guys are in the beginning courses, that's when it's kind of, yeah. As you get to the beginning of the courses, you have all these questions about stuff you haven't really learned yet, and then once you kind of learn it, you're like, oh, it starts making sense, and the questions get less. But at the beginning, it's always like it's that need for perfection. But I don't mind it. It's part of the job. It's why we charge a fee, right? I was having that discussion with someone the other day where one of the weirdos on the internet, where it's be like, well, if you're a successful trader, you should just coach people for free instead of making it a business. And I'm like, why? Well, because you're already making money from trading, so why not coach for free? I'm like, I don't know about you, man, but like, no offense, there are very little things in this world that I'm gonna go do for free. And if I go to work for free, I'm giving a free type of effort, right? If I were to do this for free, I'd pop in for a live room maybe once every other day and be like, hey guys, you want to join me today? For a few hours, then leave, right? But we're making a massive investment in time, Jason Greystone and myself and the entire team. It's a massive investment in time and helping people. And just like we talked about opportunity cost before, that time takes away from my trading. That time takes away from my other businesses. That time takes away from my family. So yeah, I deserve a fee for it. If it were free, I would still coach for free. It would just be probably inconsistent and on my own terms. It would be random, where it's like, hey guys, no live room this week. Okay, I just don't feel like it. Or it would be like, hey, don't email me, or I may get to your email once a month, something like that. So yeah, it's part of the deal, and I don't mind it. This is my passion. If it were free, you would have really bad reviews on Google. We get really bad reviews no matter what. I'm sure people are always angry about something. Tons of stories about people being angry. I'm sure OG's got a lot of stories about people being angry off of the free stuff. Man, I took that $1 trial and I want my dollar back. So, sir, you're saying what you received for 2 weeks on the platform wasn't worth your dollar? Yeah, I want it back. Okay. All right. I'm just gonna start emailing people dollars, or just snail mailing people dollars. All right, so pound dollar here. Why did my indicator stop? Yeah, 2 weeks later. Cancel my trial. Okay, it cancels automatically. All right. Hey, I signed up for a trial a month ago, and now my indicator doesn't work. Yeah, because you're not on the platform anymore. But you gave me the indicator. It's part of your trial membership, sure. But it doesn't work. Your trial membership is over. Well, how can I get it to work? Sign up for a premium membership. Is that free? Pound dollar. All right, so in consolidation here with, yeah, that's the response. Forward to OG. Forward. That's what I'm sorry, OG. That's what I do. I just forwarded to Daryl. I know he hates me for it. I know he gets the email like, man, stop sending these idiots to me. And they'll probably forward it to Darren. We'll just forward everything to Charles. We'll let the newbie handle it. Every angry email goes to Charles from now on. All right, so pound dollar here. We're starting to consolidate a little bit. You can see the kind of the loss of strength in the trend. We know that when we have consolidation, we need to be on alert for potential pattern formations. And there's actually going to be one down on the hourly, which was close to completing, but didn't quite do it. So again, you can see the consolidation here. We have a deep pullback. Market tries to make new lows, and we can't even quite get to our previous lows. Can't even quite get to our previous lows. The range is starting to tighten. If you look at a trend line here, right? Lows are getting higher. If you look at a trend line here, highs are getting lower. Nice area of consolidation. Again, when we have areas of consolidation, good place to look for advanced pattern formations. Also, what coils eventually explodes. So be on alert for some type of breakout as well. Now, when will that happen? Who knows? I don't know how tight this spring will be squeezed, but you typically look for a breakout in these situations. Now, in this type of pattern, this is a wedge pattern. It's more of a neutral pattern. It's a little bit different than, say, a flag or a pennant or an ascending triangle or descending triangle, where you have a good idea on the expected direction of the breakout. This one's completely neutral. Meaning, there's as good of a shot of it breaking out to the upside as there is to the downside. Now, if you put a gun to my head and you made me choose, I would say the downside is more likely. Why do you think I would say that? Yeah, because the prior move was bearish. The underlying trend is bearish. So when in doubt, I will always look for the direction of the underlying trend. I think that's a safer way to be involved in counter trend. But understand there's no real, the edge here, if anything, is very, very small compared to our other consolidation patterns. Now, we go down to the hourly, and we had I thought we had a very deep Gartley. Was I wrong here? Oh, that might have been on the 15 actually then. Yeah, it might have been on the 15 minute this morning. It looks like that got busted out anyway. So not much here on the hourly, actually. Yeah, on the 15 we had a potential deep Gartley, and that's the one that looked like it got busted out. If I'm remembering correctly. Yeah, let me see this real quick. It would have been right here. X to A to B, yep. B to C would have been down here, and then C to D would have been at the very, very highs right here, but that is invalid now, right? That's a big difference from 5 o'clock this morning, so we don't need to worry about that. That's what was on the radar. I snuck a look at the 15-minute chart by accident this morning. I know I'm not supposed to, but I did. So at this point, I don't really see any reason to do anything here on the pound dollar. Actually, this is a nothing type of move. We don't have a directional bias, right? We have zero directional bias from the higher time frame. I have no idea which way we're more likely to move in than the other. This is, in my opinion, this is a pair that you just avoid. Now, can we find the opportunity? Sure, right? For you guys that are new, right? I have the ability, and once you become a good trader, you will have the ability to find an opportunity to get long or short at any given time in the market. Did you guys know that? Any market, any time frame, right? Any pair, I guaranteed I can give you a reason on why you should get long and why you should get short. Now, some of you are like, Akil, that's amazing. That's not a good thing, because that is what traders will do to convince themselves to do whatever they already want to do, right? Confirmation bias. If you're watching the news and you're hearing all this, the new election and the new appointment and the Brexit stuff, and they're telling you have to sell pound, you have to sell pound, you have to sell pound. If you get that confirmation bias and you start looking at a chart, what do you think's going through your head? I have to sell pound. So when you look at a chart, you're blinded to anything that says buy, you're blinded to any signal that says stay away, and you're only saying sell, 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 because that's what you already want to do. So you will get on this chart and you will create a reason to sell. You will get on this chart, you will say, well, Keel looked at the 4-hour chart and he said that we're in a wedge pattern, so the next move of the wedge pattern is going to be a move across to this channel. Well, guess what? Here's the move across to this channel. I'm going to get short right now in anticipation of a move down here. I mean, it doesn't sound like that bad of an idea, does it? Right? We draw our trend line out here, right? We take profits down here, right? Look at this risk reward, baby. Look at this risk reward. Risk is, or reward is here at maximum. At maximum, your risk is here. That's a pretty darn good trade in my opinion. I don't know why I did that. Hold on. Anybody down to take it? Huh? Who's with me? This is one of those things where we always talk about, well, traders being sheep, or even human nature being sheep, right? And you know, they call us sheep because sheep tend to I guess they're considered not very smart animals, and they just follow the herd, and they typically follow the herd right off a cliff. That's how Native Americans used to get a lot of their animals. They used to I don't know how they got. I guess you herd the herd, and they lead them right towards a cliff, and then they fall off a cliff, and then someone else would be down there just collecting the meat, whatever like that. But you do the same thing. Like imagine me, you know, I'm the leader of the gang, right? And I'm like, come on, guys, we're getting short. Like Will Ferrell from what's it, Old School? We're streaking. All of us. There's thousands of us. Come on. And we're running and we're running and we're running, and all you guys start ripping off your clothes and start streaking with me. Yeah, we're doing it. We're doing it. And then I stop right before we get to the cliff. I'm like, this isn't a good idea. And everyone just goes off. And then there's a smart trader at the back. George is like, yeah, I wasn't doing that. Yeah, we're Naruto running through Area 51. There we go. That's a more recent one. Arms back, shoulders in. So that's a good example. Now, and again, I'm not saying that you shouldn't buy or shouldn't sell, right? The point is, I'm saying you shouldn't be blinded by other reasons and convince yourself to do something just because you want to find action. Now, if you have a legitimate reason to sell because of your trading plan, that's called a good trade. You're doing what you're supposed to do. But this example is for someone that sees the chart, maybe they're bored and they heard something on TV and they have to get involved, they need to be involved. And they start convincing themselves to do something they're not supposed to do. So we're looking at two different stories here. Rap says, already on it? Nice. Lat says, if anything, in the markets, the most people are doing the same thing. They get banged in the head by the big boy. Yeah, do the opposite. In life, man. In life, right? And I've always been this way, and I didn't start accepting it until I was older. But I've always been kind of the opposite of people. And I've been the outcast and the weirdo because of that. Where it's like everyone's doing this. I'm like, I don't really think we should do that. Or, hey, dude, why are you, instead of going out, why are you going to sleep early? I got to wake up and build these houses, man. Yeah, but just hang out for a little bit. Nah, probably shouldn't be hanging out like 12 o'clock. Probably not a good idea. I'm just gonna go home, play some video games, go to bed, wake up, build some houses, right? So I've always done the opposite and been kind of the weirdo because of that. And then you grow up and you realize you kind of accept it. You're like, wait a minute, man. 80% of these people are losers. That's harsh. They're not losers. But 80% of the people aren't. There's a high percentage that are losers, don't get me wrong. But 80% of the people maybe aren't doing what you want to achieve. Right? If you want to achieve something, it takes sacrifice. It really takes doing the opposite, right? And you start to kind of accept that. We're like, man, I'm just, I'm the opposite, but that's not a bad thing. That's actually a good thing because I don't want to be like the herd. I want to be different. I want to be different. Now that can also be a problem because some people take that too seriously and they're so different that now they have to just be opposed to everything, right? I'm sure we all have that friend or know that person where it's like, whatever you say, they're just going to take the opposite stance just because they are hell-bent on being the opposite person. You get that too, and that can be that's when you take it too far. When it's like, hey guys, the earth is round, right? No, it's not. Here's why. It's like, oh man. Jim says, professional traders find a reason to take the trade. Amateurs find an excuse. Oh, yeah, good. Yeah, that's a good one. Yep. And I would even say this. I would even say, add one more to that. Professional traders find a reason not to take the trade as well. That's one of the questions I always ask to myself. Why shouldn't I take it? If I can't convince myself not to take the trade, it's probably a trade I should be in. Yeah, that's a good one, Jim. Yeah. Al says play some video games till 5, but I can't stay out. No, I can't even stay up till 5, man. 3 o'clock is my limit. No matter what happens, I can go to bed at early or late. I can't stay up past 3 o'clock. I'm not a night person. I'm an early bird. I am not a night person. All right, let's go to any questions on pound dollar. We're gonna do one more. You guys want to do one more before a break? We're going about an hour. Let me know. We can do one more. We can take our 13-minute break. Cool. All right, let's go to euro yen. Euro yen recently had a break of structure. Again, many of these euro pairs have been like this. And if you guys are just coming in, again, very important day for the euro tomorrow. Just be on high alert. I would personally stay away, but you guys are growing. You can do whatever you want. So euro yen here on the daily. And again, this is one of those interesting situations where, we got this big wick here, blah, 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 blah. But we're continuing to break structure, right? We started to base off a little bit here, thought that we would maybe see a reversal in trend, and we did not. We continued to go lower, and so far today, right, we are putting in and currently trading at lower lows than yesterday. So if you're looking at this opportunity, I would be looking short. I would have, unless we get some type of complex reversal pattern, I would have no reason to look long. I would be looking short, but at the same time, with all short trades, you want to be a little bit cautious, just because we don't know where that move is going to end. And I've still got some gaps on my data, so let me just go over to. I'm going to go over to TradingView. I don't know why my data is gapping today, but we'll go over to TradingView and check it out here. Ale says, pull back into the wedge and retest of lows, one in, one out, question mark? Why the question mark? You tell me. Now, I wouldn't, this is not going to be a wedge pattern. So if that's what you're referring to. This is not going to be a wedge pattern right here on a daily. Upward trend line, yeah. So if you're a trend line trader, you can certainly look for that, but that's not going to be a wedge pattern. But I think you're referring to this down here, I believe, on a lower time frame. But just to clear that up, I think you're referring to the lower time frame one. But if not, let me know. So price action again, lower low, lower close here on the 4-hour, not so much on the daily. Right, so you want to keep that in the back of your mind. Also, again, we're in that zone of that big wick, so we don't necessarily know where we can go lower to, which makes this a very confusing case. I believe, and correct me if I'm wrong, is this the wedge pattern you're referring to, Ale? Okay, yeah. So here's the wedge pattern that Ale was referring to. Let's go down to an hourly here. And you can see we do have this wedge pattern. We do have a level of structure before that, right? So if we look here on the hourly, we're going to have a nice kill zone right here. Again, the dilemma is we are technically in a trend continuation setup, but we are at an area where we are uncertain on how far this trend can go. So for me, it doesn't give me a lot of interest in it. But if you are, I would be cautious. I would definitely take it more as a trend continuation approach than a trend following approach. But this would be the area in which you would be looking to get short, the first area. Avery said potential bear cipher as well. Yep, we're currently putting in a C leg right here. So if we just draw it out really, really loosely, if you guys don't mind. C leg, we could have a potential D completion up here. Now that would line up with your wedge pattern as well. So you can look to combine that advanced pattern formation and that consolidation pattern at the same time. We may also have a smaller advanced pattern formation setting up in here. So let's just go down one more time frames, go down to our, go really deep into our day trading time frames. And we can actually make that kill zone a little bit smaller. So if we looked at the initial kill zone being from, really from here to here, right? We can actually isolate that kill zone in two different levels, right? We can have a smaller kill zone from here to here. Would you guys agree? And we can have an even smaller one. Now, where do you think I would draw that even smaller one? You killing me, Smalls? Yeah, the top of the blue bit. So right in here. Right in this area. Now, we don't talk about this much. This is more supply and demand zones. But this is the consolidation between the massive drop-off, right? This is a good zone that I like. So those are two levels to look for. If you're looking for bearish entries, three kill zones you can look for. Bigger, medium, and smaller. Let's bring some fibs on here and let's see. You do hit the 786. So you're not going to be on Gartley alert. Honestly, if you're looking for shorts, I would look for this, right? That initial move has already been made. I would look for perhaps a retest of this structure, a candlestick formation that provides you a signal of a hold, and then a continuation down, or ideally, a move up into this level, like a complex pullback up into this zone, a hold of this level, and then a move back down. And that should give you some pretty good Fibonacci influence as well. It should be well, no, it's going to be above that. But yeah, maybe look for a complex pullback into that zone and chance to get short. So that's what I would look for. I don't really have a lot of interest in this, but that's something you can check out if you're interested in a short opportunity here. Let me just load up a range bar chart real quick as well. Bigger picture could have a head and shoulders as well. So if we continue all the way up to the high of the bigger kill zone, could put in a potential head and shoulders. We're very far away from that right now, so we don't know, but you can certainly put it on your list. Here's a look at the range bar chart. And here's a good example. If you're looking for an aggressive short, you guys know how I trade and what I look for. What do you guys see happening here? Yep, RSI swap, right? So we have our initial retracement right here. Boom, you can see the RSI swaps from oversold directly to overbought. We have our lower low, lower close. That's what I like. That's what I like right here. Entry right here. Targets, again, ideally you'd want to go for a trend following where you look for continuation targets. That's going to open up your risk reward a lot more. In this scenario, very little confidence of where we can continue lower to. And again, it doesn't mean you can't shoot for that. Maybe you take half your position or a partial position and shoot for that bigger extension down. I think if you had to choose one way to be in the euro, what do you guys think? Would you rather be long or short? If I forced you to choose one way, we talked about this earlier. Short, right? So you're in the direction of the path of least resistance. Here may be a good idea. This may be a good idea. This may be a good idea. I hate saying this with newer traders in the room because then they get all excited about it. All right, so probably about 3 or 4 times a year normally, I catch a home run trade. Haven't had any this year just because the markets have not moved. Or given me the opportunity to get involved. I had a few lined up on the pound, but I haven't been able to get involved in it. But a home run trade is either a trade with very, very, very big profit projections or a trade where your technicals happen to line up with the fundamentals and you project some type of big move. So I just asked you, and we talked a little bit about the fundamental situation earlier, that if you had to be on a certain side of the market when it came to the euro, we'd rather be short than long, right? Not only has the trend been short from a technical perspective, but from a fundamental perspective, I think there is the anticipation of an eventual rate cut. Again, there's a 30% chance it can happen tomorrow. But I think the better projection is that they wait to see what the US does. But either way, I think the path of least resistance is short euro. This position gives you a short euro position. And if you're someone that's anticipating a bigger move in that direction, it may be a smart idea to take half a position off, maybe at your traditional targets, and leave one on for the potential home run. The monster head and shoulder. I wouldn't call it a monster head and shoulder. It didn't have that much room to travel. But it worked out really nice, Mitch. I know what you're talking about, yeah. Talked about it yesterday, yep. Wouldn't call it a monster head and shoulder, though. Just because there wasn't a lot of room for expansion there. But it was on the daily chart, so that in its own right makes it a bigger pattern formation. But yeah, did you catch it? Got to catch them all. But does that make sense? Does that make sense with the home run trade? So that is a way for you guys that are more seasoned vets. That's a way that you can position yourself. Newer traders, I would ignore everything I just said. Yeah, good. That is the way you can position yourself. But anyway, so this would be the short opportunity right here, right? Obviously, right, if you want to put your stops in the most safest place possible, stops would either need to be, if you guys remember our two levels of structure, either above this kill zone or this kill zone. Now, would you be able to get a quality stop loss above those levels, or a 1-to-1 risk reward, assuming that's what you need above those levels? Probably not, right? But you could do this. If you're using an ATR stop, if you're using this as your swing point, right? Use a 1 ATR stop. It's more of an aggressive stop loss above your swing, right? Your swing's at 120.52. 57 would be a single ATR. That puts you in a position where you're closer to a 1-to-1. However, it doesn't give you the safety of structure. So if you can default to a 1-to-1 and give yourself room, flexibility, I think that's the best way to do it, assuming you got in exactly at market. If not, then maybe this is a trade that you just couldn't take. But this is my favorite setup for trend continuation trades, right here, or trend following trades is right here. That RSI swap, that lower low, lower close in the direction of the trend. Again, in this scenario, this is not a real trendy situation. But imagine this being a trending market where we had a pure outlook for where price can continue to. This is what I look for all day, and I look to trade it like a trend following trader. Virtual private server, sounds techie, misread ATR, found a fancy indicator on TradingView today. Not what I was looking for, but fancy. What's it called, Latch? Is it called the fancy indicator? How awesome would that be? Multi-time period. Okay. Too many words. All right. Any questions before we take our first break, guys? And gals? Great first part of our session today. All right, let's load 30 minutes up on the clock. 30 minutes. Ooh, 13 minutes, excuse me. Brain's dead. And I'll see you guys in a little bit. All right, gang, back just in time to kick off round 2 of our live trading room experience. pretty decent day in the market today of analysis. So far, we've done euro dollar, we've done pound dollar, we've done euro yen, and we've had a handful of pretty good rants. As you guys know, I put out a quote each and every day, and today's was a pretty good one. Also, something interesting here as well as I bring my Twitter feed over. I put out a poll this morning on the Twitter, and it said, let me ask you this question, be honest for a second. When you lose a trade, assuming it's considered a good trade, who do you personally blame? Yourself, your broker, the market, or nobody? And 54% of people said themselves. What do you guys think about that? How does that make you feel? Where would you stand on this? What would your answer be? Now, again, you're a different demo than probably the average trader, at least mindset wise. But it's always interesting. Mitch says no one. Raymond says, I mean, if you follow your plan, you can't blame yourself. Yeah. And I tried to put that in there as much as possible, assuming it's considered a good trade. It is what it is, yeah. And here's the thing, right? You know, we know that we should blame nobody. I'm very happy to see that nobody is in second place right now at 36. But this is common in trading, right? This is common in trading. It's very easy to, I guess we're programmed throughout life to think that when something doesn't work, we are wrong. Right? Am I right? I mean, that's just how we're programmed. You get an answer on a test wrong, you're wrong. It's on you. You are bad, right? It's we look at it as a negative. Even in like science, and science is probably the middle ground where you're working on an experiment, you're working on inventing something, and you go through it and you click the button and the robot's supposed to do whatever it does and it doesn't work. Are you wrong? Well, I guess technically a little bit, maybe, yes. But I think the mindset needs to be more like a scientist, more like an inventor, where you're not wrong. You just haven't gotten the right answer yet. And your wrongness is just a step on finding out what doesn't work so that you can do less of that, learn from it, and find out what does work. And trading is one step forward from that, where at least if you're creating an invention or you're a scientist, it is under your control, right? You have complete control over, I guess, the outcome. And maybe you don't. Maybe you're trying to solve something that can't be solved. But in most cases, you have complete control over the outcome. You're just trying to find a way to make it work. In trading, the thing is, we never have complete control over the outcome. I think trading is the one, and maybe like martial arts, perhaps. I'm trying to think of another example of an industry or an example of where you can do everything right and still be wrong. Fighting, perhaps? You could do everything right and your opponent is just better. Sporting events, right? You can play the perfect game and the talent level is different. I know I've had games like that where you play that you lose and you feel kind of positive about it. Chris says poker. Yep, poker's usually the go-to analogy. Again, I don't get into it much because I don't know how to play poker. Poker is very similar to trading, all probability, expected value. Poker's the one thing where you can have, and that is the best one because it is all probabilities. You can have the hand that you would expect to win. You can raise the bet and you can handle it the way that you should with that type of hand. And then every once in a while, someone else just might have a better hand. Gilbert says, women, a chore your wife gives you? You can do everything right and still be wrong. That's a, yeah, you know what? Yeah, that may be the best. I've had my fair share of relationships where you can do everything right and you're wrong. I had a relationship where I got in trouble for not arguing. I was dealing with a certain type of girl that liked to argue, right? She was from the hood. That's how a lot of people from the hood are. They want to argue, they want to fight. That's just how they get down. And I'm not, I'm not that. I don't like wasting my time on arguments. I don't see any value of it. So she would yell and argue and scream, and I would just sit there like, all right. And then I'd get yelled at for not arguing. You don't even fight back. Okay. So yeah, man, you can do everything right and still be wrong, man. That may be the best one. Jim says, even with all computer monitors, weathermen still get it wrong half the time. Weathermen, yeah. Let's not talk about weathermen. But that's true, yeah. Yeah, weathermen have all the stats in the world, and then they still get it wrong, and then they get yelled at. But it's interesting how we go to, this is something that has to change here. This is something that has to change. We gotta stop blaming ourselves, because when we blame ourselves, that's a direct hit to what? What does that affect? Hurts our confidence, yeah. And be honest with you, I mean, confidence is all we have at the beginning. Confidence is the most important thing, right? You guys know the trifecta, right? Belief, action, results. Belief, action, results, right? Confidence directly affects your belief. If you don't have a belief in what you're doing, it's going to affect your action. And when it affects your actions, when you're not taking enough of the good ones and maybe you start taking more of the bad ones, that's going to have a direct effect on your results. And then, just as the question posed, right? When it has a direct effect on your results, if you start blaming yourself even more, it just affects your belief even more, and that you're going in the opposite way that cycle should. So this was interesting. How do you handle this? Is very important in trading. You have to have that. You have to have that mindset of hey, I did what I'm supposed to do. I don't know why I didn't think of this example. A perfect example is what we do with track and field. I coach athletes on this all the time, so I don't know why I didn't bring it up. Where it's like track and field, we always, people try to say it's a race, yes, but you don't necessarily control the outcome of the race, especially in the sprints where it's you're confined to a lane, right? Can you control how fast the person next to you runs? Now, I know in the longer distance races, there can be strategy where you try to, you take people out and do this and do that. But if you're running your own race and someone else is running their own race, you could run the best race of your life and someone else just might be better. And you may lose. You may drop your time by 2 seconds and someone else dropped your time by 3 seconds. They just did better than you. Can't blame yourself. You got to be happy about it. You have to be happy about it. Yep. So always I like doing these little probes to kind of look at the mindset of people. Mindset's so important, yet nobody wants to accept it. 10% said the market. I'm glad no one said their broker. At least we're dispelling that myth. We're getting that one out of there. Now we can work on the other two. But yeah, interesting. Yeah, but the quote I wanted to show you originally, one of my favorite quotes from, Stephen Burns, talking about drawdown. We've talked to you about this before. Just to give you an idea of what a drawdown looks like. And, obviously this can be different depending on money management situations and stuff like that. But assuming you're doing kind of a normal risk, you're doing like a risk percentage type of position sizing. If you have a $100,000 account and you lose 50%, then you have, if you have a $100,000 account and you lose 50%, then you have 50,000 left. So if you have a 50% return, you only have 75,000. You need to double that as in 100% return to get back to break even. If you lose 10%, it takes 11% to get back to break even, 20%, and it takes 25% to get back to break even. Goodness, a 75% drawdown, I would need a 300% return. Drawdowns are interesting. Again, this is based off a set risk percentage, but people underestimate how much is actually needed to recover from a drawdown. They think if they lose 50% of their account and I just do the same thing, I'll gain it all back. No, you got to work twice as hard. Twice as hard. All right. Let's go to, where do you want to go next? Let's go to Pound Canada. Pound Canada was on my radar. Oh, we can do New Zealand dollar. That's fine. Well, look at that. There's the breakout. I was looking at that on Pound Canada. So we can look at that next. Nice little breakout situation. We can go to New Zealand dollar. We can give the people what they want. That was also on my list of pairs to watch. So, New Zealand dollar, right? Identify what have we recently done. We've done two things. One, we've recently broken and closed above a previous level of structure here, which realistically was more like this. Two, if we look left at this level, right, we came right to a previous structure left as well. I thought we broke above that. I'll check on the lower time frame. We might have broken and closed above that level, but you do want to keep that minor level of structure in mind. But what we're doing right now is we're retesting structure, right? We're putting in a retracement right back into previous structure highs, high momentum bearish candle. And if we go down on the lower time frames, we are at a very nice level of structure that you can look for a buying opportunity. Now, what is awesome about this level of structure? What would you guys think? And here's your doji, right? Indecision as we come into that level. RSI goes oversold, right? So we're oversold. Market's thinking about it. And then we have a little bit of confirmation here for higher high, higher close. Cool thing is about this situation, I don't personally think it's the best trading situation in the world, but what makes it more appealing, the risk is so small. I mean, ask yourself this question, guys. Where do you know you're wrong at? Where do you know you're wrong at? Right below this current level of structure, right? So you don't have to take a very, very long stop loss. Stop losses could be right below that level. On the other side, your chance for expansion, right? Even if you're super conservative and you're saying, guess what? I'm going to shoot for right here because I'm a little bit worried that this may be a head and shoulders situation setting up, right? Look left, have a little bit of consolidation right here in this doji candle. Look lefter, previous structure swap zone where resistance turned to support. Even if you're saying you're going to do something like this, risk reward is still in your favor. And of course, if you're more aggressive, you're shooting for a retest of this level and maybe even a continuation. So yeah, really, really good opportunity. This is one of those opportunities where, again, it's not the best trading opportunity in the world, in my opinion. But because the risk is so small, it makes it that much more delightful. Now, on the other hand, if you're a counter trend trader looking for a reversal, right? You can look for that level we just talked about right here and start eyeing up reasons to enter for a potential head and shoulders top. So earlier, we looked at a head and shoulders bottom. This would be a good example of a head and shoulders top. Make sense, guys? George says, I want to get in, but I was in a trade on my double bottom. That happened last night. And you know, that's another reason for entry too, guys. Actually, yeah, if you look at, if we take this here, if we retrace, if you're more a conservative trader, always wait for the double bottom. You can go down to an hourly, right? And you can look for a double bottom on this move. Give yourself a more conservative reason for entry. Yeah, not a bad New Zealand dollar. I forgot to write that down. NZD USD, about 124. Not a bad trading opportunity. As Latch says, please push higher. Pretty please. Yeah, not bad. Very, very low risk. All right, let's go to Pound Canada. Next. Pound Canada was one on my radar this morning for a potential bullish breakout, and we did see it. The question is there an opportunity to get involved again? And there may not be. This looks a little bit different on the daily here. Not a pair that I usually look at, so I just snuck down to the 4 hour and looked at it. But we have an interesting situation here, right? And maybe we didn't get that break. We have a deep retracement of structure. Yeah, we have a deep retracement of structure here. So we've pushed down, and then we have a retracement that comes all the way up to a previous level of consolidation. Just for some higher time frame perspective of where we're trading at, you can see price action is at a previous low, but there's certainly room to move lower. So we're at kind of a lower structure zone, but we're not at the very bottom of it. So there is some room to move lower. We go down to a 4 hour time frame, right? Here's that level of consolidation looking left. And what I was looking at this morning was this, right? We have price action testing that upper line. What are you guys noticing with our lows here? Any type of pattern with our lows, right? Our lows are getting higher. This has the signs of a potential breakout. Now, we got a false breakout here. Not a false breakout. We got a test and a close below, which means that instead of our high watermark being about right here, now in order to see that breakout here off a 4 hour time frame, I would need to see a break of this level right here, which is about 164.45. So that we'd have to wait a little bit longer for that potential breakout. And once again, this is the same thing as a head and shoulders pattern, right? You can see left shoulder, head, right shoulder right here. Now on the hourly, this is where you're going to get a different signal. And this follows up on the conversation we started today off with, where it's like, know what time frame you're looking for what on. For a trader that went right to the hourly, you're getting a completely different story, right? Because you're going to see a clear break and close above this level of structure. So on the hourly, you're going to be saying higher high, higher close, pull back, look for a chance to trade it up. On a 4 hour, you know that we haven't had that break yet. So basically how you view this trade is going to depend on what time frames you look at. If you use the daily or 4 hours, your higher time frame, you don't have that break. If you use the hourly of a time frame, or hourly as your higher time frame, you do have that break. The key is being consistent in what time frames you use. So that's the Pound Canada for you. We'll go to Pound Aussie as well. Any questions about Pound Canada? And again, if there's any pair you guys want to take a look at, feel free to shoot it in. Pound Aussie. 128. Actually, let's take a look at Euro Pound first. We talked about the head and shoulder that Mitch talked about completing yesterday on the Euro Pound. Let's go to that dirty, disgusting pair. That filthy molasses type pair. So here is Euro Pound on the daily. And again, we identify on the daily that we are in a previous zone of consolidation. There is room to go higher, but we can definitely say that we are at resistance, and we could look for reversal reasons in the market. We did have if I remember correctly, this was from a long time ago. Let me just see. Yeah, we did have, remember this, we did have a cipher in here as well. Remember this really, really, really big cipher here on Euro Pound as well. Looking like this. X, A, B, B, C, C, D, right up there. Again, if you're in this, oh man, God bless. God bless, because you've been in it since June, mid-June. And it's mid-July, and you've been doing nothing but slowly reversing down, giving you a little bit of confidence, and then bleeding your account up slowly. Excuse me. Bleeding your account up slowly. Just every day checking your account and you slowly losing more and more money. But now you're back. Now you're back. And give it a few more months and you may run down and hit targets. Or if we get anything funky tomorrow, maybe that'll push it down. But yeah, God bless anyone that's Euro Pound. Does any of you guys trade Euro Pound? Yeah, it's not a mover. It takes its time. It reminds me, I've been catching up on or rewatching Breaking Bad. It reminds me of the guy, the Mexican they were doing negotiations with. He said they call him the turtle because he takes his time making his decisions. And I forgot, an episode later, turtle found his head decapitated on top of another turtle walking through the desert. Yeah, I mean, overall, because I tried trading before. Overall, the movements are nice. I like the movements on Euro Pound, meaning it obeys. That's a bad word. It works with my style of trading. It just takes a very, very long time to do it. Can you discuss that low RSI on the 4-hour versus the daily? Sure. What's your question about it, Colin? What can I answer for you? If it looks like it may go down on the daily, what would you expect on the lower time frame, such as the 4-hour? Okay. So do you want analysis version or do you want me to, or I thought it was an RSI question. Or how does the RSI work into that question? Just so I can try to answer you the best of my abilities. Because analysis-wise, I would look at the price chart. But if it's something specific to the RSI, let me know, and I'll try my best to clear it up for you. But are you asking how would the RSI on the 4-hour affect my analysis from the daily, perhaps? Okay. Well, not sure if you heard the beginning of today's session. If not, make sure you catch the recording. But the higher time frame is always going to be preferred. So we go through a process called IPDE, Identify, Predict, Decide, Execute. And that process always starts on the higher time frame where we gauge our bird's eye perspective. So we look at a higher time frame to get an idea and really make a prediction of what we think the market is likely to do next and where we think the market is going to go. Then once we go down to a lower time frame, that's where we're looking for either confirmation of that idea or starting to think about how we can get involved in a trade that fulfills that idea. So the first thing that I always do when I look on a price chart is I look on the daily chart. And I ask myself, all right, so identify, what are we doing on the daily? Well, we came up to previous level consolidation. We put in a new high, and we recently violated our previous structure lows, right? So I can say that this bullish trend is over. We are now in a what I call a bearish rotation, right? Now, a bearish rotation doesn't necessarily mean a bearish trend. It means that we can go back into consolidation, or we may be at the beginning stages of a bearish trend. So if we're going to start thinking about being in the beginning stages of a bearish trend and predicting that price is likely to go lower, then the question is, where is price action likely to go lower to? The first level that would be on my radar is going to be right here. These lows right here. The second level that's going to be on my radar is going to be right here. Now, currently on the daily, we have not violated these lows, right? We're actually seeing some buying pressure at these lows. So I don't have any reason to predict that price is going to go to this lower level unless we break this level on the daily. Does that make sense so far, guys? So from a trading perspective, just me personally, there's nothing here that is tradable by me. So I would move on to the next pair. But if you're looking for a reason to trade, if anything right now, I would say it would still be nothing. And maybe it's because I kind of can tell what happened on the 4-hour, but it would be nothing here on the daily, mainly because we're currently holding this level. We haven't violated this level yet, so I don't want to look for a short, and I don't want to look for a long because most likely, not only are we so close to our previous level of structure, but most likely we violate this level in the 4-hour. So we're kind of really stuck at a stalemate. Now you can see as we go down to the 4-hour time frame, we are holding this level as well. So we have a nice high momentum bearish candle down. We have a very nice reversal candle here, meaning that price action pushed all the way down. You can see a big wick to the downside. And we were able to hold that level. So in this type of situation, I would look for, and I'll explain why I'm not in a little bit. In this type of situation, I would generally look for a buying opportunity because structure has held. Now, using the RSI is something that I would use to confirm that buying opportunity. So there's a few things we can look for here, right? And this is CTS trading, right? So we can say that the RSI is oversold, right? Which gives us a little bit of confluence. What else can we add for a CTS trade here? So we're building our case for entry. What else can I add? Yep, well, we have structure as well. Yep, so I have RSI oversold. I have structure. Fibonacci extension, right? We're going to come down to, well, a long spike, but we'll come down past the 127. 127 right at that level, so Fibonacci confluence. Something else, come on. Could put a Fibonacci inversion in there as well. Should be a 1618. That's not too important to me, but there's nothing wrong with doing it. 1618 inversion right there as well. Yep, equal measured move. Yep. So Fibonacci extension, swing high to swing low. We're going to copy and clone it. And you can see that we did have a 1-to-1 measure move, and price action kind of stopped right on the dime. So what we just did there was we built a case for entry, not only based on price action and price location, but built on the other tools that we teach you guys to use. So that's how the RSI would come into play on the 4-hour. Did that answer your question, Colin? Maybe, hopefully, fingers crossed. Yeah. Yes, perfect. Now, why wouldn't this be a valid trading opportunity for me? Just because of risk reward. Let's say I were to enter at the right here at one of the best possible locations in the market. My targets would only be up here. My stops need to be an ATR below this low. Most likely I'm not getting, well, unless I'm entering right at the lows here. That's probably the only way I can get a 1-to-1 risk reward. Even that's a little bit of a stretch. So just not a 1-to-1 risk reward. Do we have 89 flat? Just short of it, Tony, just short of it. So close to a 89 cent as well, even handle number. Good stuff, good stuff. There we go. We just did our analysis on Euro Pound as well. Good answer the question and did our analysis as well. All right. Any questions on Euro Pound? Once again, if you're using a different perspective, more of a day trading perspective, a lower time frame perspective, and this hourly is your higher time frame, now you have a different situation because you do have a break and close below that level. You can start looking for pullback trades. So opportunities for price to pull back and then continue lower. Questions on Euro Pound? Now is there anything else about the RSI, Colin? Just so we make sure I don't want to leave while we're on it. I want to make sure I answer the question. I always feel weird if I don't. I know you mentioned something about comparing the RSIs from the daily to the 4-hour. So if there was a question about that, let me know and I'll get it. Okay, cool. Yep. For me, indicators are always secondary. So I know many traders look at indicator first and then make their decision about the market. I always look at price first, and then look at the indicators secondary. One of the main reasons, and that same thing goes for moving averages and whatnot. And one of the main reasons is, why do you guys think that is? Why do I look at price first and indicator second? Yeah, I mean, your indicator is based off of price. So if we had to look at one being more powerful, is it the one that follows price, or is it the one that, or is it the one that is the say all be all? For me, it's the say all be all, right? Indicators print based off what price does. That tells me that one is more important than the other. And so I'm not saying indicators aren't important. There's nothing wrong with moving averages, nothing wrong with Bollinger Bands, nothing wrong with RSIs and ADXs and MACDs and CCIs. Obviously, as long as you're using them the correct way. But understand that price controls what they do. So for me, being a price action trader, I like to look at the controller first and then use it for confirmation. So indicators are always second. Indicators and oscillators. Surprisingly, I was never a MACD person. That's the fan favorite. Any guys MACD traders? I was never a MACD trader for some reason. And you would think with all the different indicators, I mean, I had it on my chart at one point. At one point, I had every indicator in the world at my chart at the same time. It was the worst because my chart, like, this was how much price I could see, and 7/8 of my chart was filled with indicators. It was a very embarrassing time. And I remember I'd wait there. I just kept adding indicators, right? I would research indicators, and I would see what each of them showed me, and I would add all of them. Well done, Daniel. Well done. I would add all of them, and I'd wait for them to all give me the same signal. And they would never give me the same signal, right? I'd have like 4 out of 5, and I'd be like, come on, stochastics. Come on, stochastics. Come on, hook on up. Hook on up. And then like stochastic hooks on up. I'm like, yeah, time to enter. And then the MACD did something else. I'm like, I gotta wait again. It was the worst. Chris says, I used to have MACD, stochastics, and 3 moving average crossovers. Which 3 moving averages did you use? Do you remember? That's another thing, right? How much time have you guys wasted looking for the secret moving average combination, right? What's the best moving average? You guys ever do that? Where you're like, I'm using moving average, but you're trying to find the perfect one. Is it the famous 200 period moving average? Is it the 50 EMA? Is it the 20 SMA? What's that perfect combination? I spend a lot of time doing that, looking for the perfect combination. There's got to be the perfect combination. It's a secret that no one's telling me. Yeah, I did the same thing. Anyone else a big indicator junkie? Either now or back in the day? I had so many of them, man. The CCI was one of my favorites. I think it was the CCI. It looked. Is that the one that looks boxy, right? The CCI. Commodity Channel Index. I think it was that. No, not the CCI. It had to be the ADX. Yeah, ADX. ADX. No, not stock Akil indicator. Average directional index. Where you at? No, that wasn't it either. Man, maybe they have a different setting on here. There was this man. Now I can't remember. It's been so long. I thought it was the ADX. It was an indicator that looked like this. You'd have your range, obviously, and then it would be like this. It would be sharp move, and then it'd be here, and then it'd be another sharp move. It basically looked like this. And then there was another one that did the same thing. This one would be like this. I thought it was the Arun. There we go. That's it. Yeah, there we go. That was it. That was the one. That was the one. One of my favorites. Yeah, there we go. Look at that bad boy. Look at that bad boy. Yeah, that was it. That was it. I never used Ichimoku. I never used it. I never used any, yeah. I never used that, nope. Never used any clouds. This was it. This is bringing me back. This is, nostalgic. Yeah, I used to watch these things. I'm like, we're gonna cross. We're gonna cross. This is gonna tell me the direction. And then it would cross and be like, okay, all I need is the other 10 indicators to follow. And we're in business, Akil. And then as soon as the other 10 indicators follow, this one would cross back. I'm like, son of a... And I walk around my room, chest all big. Oh, we're close. We're close. We're close. You know, like that commercial with the guy with the dollar bill and the fishing line. Almost got it. Almost got it. You got to be quicker than that. Good days of bad trading. Now again, I'm sure it's a great indicator. I just had no idea how to use them, right? I had this big toolbox of tools and weapons and stuff, and I had no idea how to use them. So that's the main thing. We're not bashing indicators, just the fact that I was just using them because I would read about them and I thought it was a shortcut. I never took time to really study how they actually work. If there's one bit of advice I can tell you about indicators, it's just know what your indicator tells you. If you don't know what your indicator is actually measuring, you should not be using it. Believe it or not, there are people that are using the RSI and they have no idea what the RSI actually means or actually tells them. They don't know what it displays. They're just using it because, they saw another trader use it. Know what you're doing. All right. Pound Aussie. Once again, IPDE, where are we currently trading at? Previous structure, right? We came down, we put in a nice little consolidation range, and we broke out of it, right? Signifying potentially the reversal in trend. Where are we likely to go to next? Somewhere in this zone. We've actually already gone there. So let's go down to the 4 hour. And I would say this is a good example of a range break where you would look for a buying opportunity after the break of this level. So this candle right here. Unfortunately, there was no retracement. You gave a little bit of a pregnant pause right here. I don't know if you guys can see that doji candle. You guys see that? Market broke out, gave the smallest of pauses. Wouldn't be surprised if this is a high and tight flag on a lower time frame, and then continued on his way. But just like we talked about with head and shoulders, this would be the area in which you look for buying opportunities after this range break, and you would anticipate a continuation back to the previous kill zone. So we've already gone to that previous kill zone, so I would consider the move to be made. Yes, you could still involve yourself maybe in anticipation that we are going to see a reversal in trend and test the previous structure highs of 180.20s. A little bit risky, in my opinion, to do that. So this is another one where we're a little bit late to the party. And again, you can see kind of the pregnant pause right here in the hourly. And nice little sideways movement on the 15. So yeah, unfortunately, this one has late to the party. Move has already been made here. So that's what happens when you visit it in the third hour or the second hour. No, the third hour, yeah. All right, so let's scroll through some charts. Let me just see if there's anything that is good that we can discuss here for you. We didn't look at pound yen. What's pound yen doing? This one's doing absolutely nothing. What is it good for? Absolutely nothing. Sing it again. Yeah, we sold the bat on the 4 hour. Yeah, you're right. You're right. I mean, we should talk about that. You are correct, George. I was looking for something new, but yeah, it's always good. We have different people in here every day, so you are correct. Yep. So we still the bat here on the 4 hour chart. Yep. So still should be on the radar. And we're pausing a little bit, but we know this pair moves fast. So if we do get some type of breakout here, that's the next stopping point that you can look for, is that bear bat at 135.81. 135.81 is going to come at a nice level of previous consolidation as well. Yep. Dollar yen, loonie. Give me 1 second to sneeze. All right, very good sneeze there. Aussie dollar. So we had a bat pattern here yesterday that was broken and violated, right? We're looking for a bat pattern. It lined up with a complex pullback. I said, hey, if you are an aggressive trader, well, one, if you're a pattern trader, that bat is a valid bat pattern, so you should take it. But two, if you are an aggressive trader looking to be involved in a potential trend continuation trade, this is an area that you should look to get involved in. You can use that bat as an entry reason into the bigger trend continuation trade. Unfortunately, the market had other plans, right? It broke and closed below. It violated that reason. So now we have to retool and look for something else. Now, it looks like a cipher. It's not. The B leg is just short. That's the first thing that comes to my mind. Ooh, cipher, buy it up. But we're just short on the B leg. Normally what I would say in this situation is look for this, right? You have your previous level of structure. This is where your structure kind of changes, right? You have your previous level of anticipated support. Support did hold for a candle, 2 candles, and then we broke below it. You can now look for support to act as resistance. So look for a retracement into this level. You can look for a short opportunity. I see no reason to anticipate the market continuing lower for a long period of time, but would not surprise me to come down and retest previous structure lows right here. So if we do get that retracement into the 70-cent level, let's just call it that, we could push back to 69.80s, which isn't a great amount of room, but from an analysis perspective, it makes for good analysis. Any questions on Aussie dollar? Shame on you, pattern. Shame on you. We talked about New Zealand already. Latch is being selfish and wanted to go straight up before anyone else can get an opportunity to be involved. Aussie Canada. This is one we were looking for a break yesterday. On Aussie Canada, nothing appetizing there. Euro Aussie. Did pound Aussie, did Euro pound, Euro Canada. This is one nope, nothing on Euro Canada, Euro New Zealand. And again, I'm just looking for opportunities that will make for good discussion. Euro, Aussie yen, nope, no, definitely no. New Zealand yen, nope, came back past structure. Potential head and shoulders here on Aussie New Zealand. So we're at the right shoulder right now. Again, we've been coming down. Let me just get some perspective on Aussie New Zealand here. AUD, yep. NZD 154. Where do we come to here on the daily? So there is still some room to go lower here. You still travel a little bit lower here in Aussie, New Zealand, but so that's important because it may dictate how aggressive you are at a right shoulder. The fact that we never violated this previous outside return, and the fact that we still have room to push lower on the daily, means that I would be less and less inclined to look for a trading opportunity with the right shoulder because it's much more aggressive. So we do have a head and shoulders pattern here, not the greatest one in the world. We have a drooping neckline. So if you're using a kind of a trend line for trading, we would need to see a violation of that neckline, that slanted neckline, before having an official pattern. The further that neckline droops up, what does that do? What does it look like it does? Let's just say we're projecting a anticipated move to here. It limits our profitability because now you're looking at a move from here to here. Yeah. So you can look at a horizontal neckline. This one's still going to be a little bit more room, but not a lot of room in this trade here. So that's why I was looking at a potential opportunity here at the shoulder, because obviously that's a lot more room, but because we don't have that top-down analysis or that higher time frame analysis really confirming that we are indeed at the end of this move, makes it a little bit more difficult, a little bit more risky, I should say. Still tradable if there's a way to do it. There's a way to do anything. Just a little bit more risky. Risky business. All right. New Zealand, Canada. This one's a little bit interesting. And we're at 156. This one's a little bit interesting because we came down into previous structure lows, inside level of structure. So if we look at what price action did, we rallied up. We came into a previous level of resistance. We could still go higher. But price action held that level. We ended up breaking through the lows, and we ended up coming back down to our inside level of structure, which was also two inside levels of structure here. And now we're starting to see a little bit of a reaction. So not a lot of interest from a swing trading perspective, because I don't think there's any reason to anticipate a move higher, especially after we've held this previous level of resistance. But maybe as we go down to the lower time frames, perhaps you can look for a buying opportunity, and maybe not even that. Perhaps you can look for a short-term opportunity to get involved long. Where is our next level? Yeah, nope, never mind. We've already come to our inside level of structure here. I was thinking we had a little bit higher to go. And originally I was going to say you can do something like this. You can look for a pullback in the structure and then a chance to go higher. But the move has already been made. So that one goes back on the shelf. We looked at pound Canada. Oil's been disappointing. Where's Nick? We need Nick back, our oil trader, to give us the inside scoop. Gold, same thing, breakout of the pennant pattern, the wedge pattern, and then we've kind of just stopped. We got our pullback and then stopped. Still above that 50% line. Last says Euro Swiss. Let's check out Euro Swiss. Euro Swiss. Let's see what we're doing here on the daily. At previous level of structure on the daily here. Is that a 618 as well? Nope. Nowhere near it. Man, I'm off. That was bad. Let's go down to the 4 hour. So you got a double bottom on the 4 hour. Again, my one concern would be where that double bottom pressed to. Because we kind of stair step down so low, or so small, I should say, As that double bottom retraced, we already came to previous structure lows, and that removes my interest from the trade. But a nice valid double bottom here. If you're interested in getting long and this doesn't bother you, I think it's a good long opportunity. And of course, could be setting up an advanced pattern formation as well. If we take this high, maybe even a cipher. Nope. Well, measure it out. But if we take this high and I kind of ignore the scribble that I've put on my chart. Give me 1 second. Euro, Swiss. We could have a potential Gartley setting up as well. Something that looks like this: X to A to B, B to C. CD completion right up here at the 886. So a Gartley that kind of looks like a bat. Silver was one. I put in the trade floor at a pro trade log this morning. Silver was one. Again, what does this look like to you guys? Ascending triangle. Be on alert for a potential breakout here at silver. We have just, we are at a higher level of consolidation. Looking left over here, but we have also just cleared previous structure highs here. We did technically break and close above this level, I believe. Yep. So look for an ascending triangle here. I think if we break out, I think we can test the highs here. I think we can go back to 17 bucks. Looks like this may also be an advanced pattern formation setting up too. I should look at silver more. Actually, I own some silver. But then again, I tend not to look at the stuff that I invest in. You know what? Do any of you guys still follow Jason Stapleton at all? He did on Instagram the other day. I didn't really pay attention to it. I was watching it at night when my kid was asleep, so it was on mute. But he had what did he have? Those little gold they were like little gold cash things. It looked pretty cool. I didn't again the sound was off, so I couldn't tell what it was. But it was like these little. It was gold, but in like printed like dollars, like in that type of sense. Where it was a lower quantity of gold instead of like carrying around like an ounce or something like that. But I can't remember the name, but it looked pretty cool. It'd be cool to give away as like a gift. It's like something you give to someone and they frame it where it's like, hey, here, instead of giving like who wants to give a brick of gold away, right? You give a little $5 thing of gold and they can frame it and say that they own some gold. That's a pretty cool idea. I just don't remember what they were called. But I remember I liked it. So silver here, yeah, potential break on silver. Ascending triangle. Wait for that breakout. And again, there's three ways of trading it. Looks like the ship has sailed on, unless we get another retracement, on positioning yourself prior to the break. But you can also position yourself during the break and, of course, after the break. Did you already check the dollar yen bat? No, I didn't. What time frame? I kind of looked at dollar yen for a second and said I don't see anything worthwhile. But shoot me a time frame. I'll look at it. In the meantime, while you're doing that, 60. Never mind. I was going to say go to platinum. Platinum was another breakout this morning on the radar. Dollar yen bat. Dollar yen. Where'd you go? Here you go. USDJPY is at 204. And we're going down to the 60X around 107.77s. All right. 60-minute chart. We're looking bullish, bearish. Will I be able to see it? Bullish, bearish. 106. Oh, I see what you're looking at. looking at, Ollie's looking at this right here. X to A to B, B to C, and C to D at 107.83. Is that the correct one? Perfect. All right, heading back to platinum. Appreciate you, Sharon. Did we break this level? Yeah, well, platinum's already rolling. Yeah, okay. Yeah, platinum's already rolling here. DXY, DAX. Dollar Swiss has been disappointing, man. We had some really good setups earlier in the year, and then none of them it just collapsed on us. It just did nothing. It just stopped moving. All right. Any other questions, comments, concerns before we shut things down and I get ready for our team meeting and get this recording up for you guys? I did put up the event on YouTube, the pre-launch of the foundation course. So if you go on YouTube, you can just, I don't know what you can do, but it's there. It's going to be July 28th at 2 o'clock p.m. So this Sunday at 2 p.m. I guess you can reserve your seat maybe on YouTube. I don't really know. Nice. I found it interesting that on dollar yen bats with B382, better win rate than the 50%. There we go. Finding your edge. Now, is it only like that on dollar yen, or is it with that on other pairs as well? Only for dollar yen. Interesting. Just to show you different pairs, different personalities. All right. Well, let's shut it down. I'll see you guys tomorrow. Until then, plan your trade. Trade that plan. You guys have a great rest of the day. I'll probably be on the chat a lot today. So if you have any questions, hit me up on there instead of sending me 18 emails. All right, guys. Take care.